It's a brand new week. Good morning, everyone. Welcome to 55 minutes of current and relevant business conversation. That's what we do here in Business Morning. I'm Ini John Mekwa, and we start where we normally do, which is what's going on in the global oil space. We saw oil prices dropped 5%, and that's heading for the steepest single session decline in more than 6 months. And this happened after the United States President Donald Trump said that Iran was seriously talking with Washington, signaling de-escalation with an OPEC member. So looking at the numbers for this morning, very deep red for Brent, 5.12%. But you can see the price is still above $60, $65.77. So that tells you where we're coming from. We're coming from about $70 last week, and so that's why we're still at 65. For WTI is also about the same thing, but the price is at $61.75 a barrel. Both contracts are dropping sharply, multi-month highs, as risks of military strike recedes after President Trump, as his comment on Iran over the weekend. He had repeatedly threatened Iran with intervention if it did not agree to a nuclear deal or continued killing protesters. At a meeting yesterday, OPEC Plus has agreed to keep its oil output unchanged for March. In November, the group had frozen further planned increases for January through March 2026 because of a seasonally weaker consumption. Still in the oil space, Nigeria's crude oil export is expected to decline by about 225,000 barrels per day this month, February, following the shutdown of the Bonga floating production, storage and offloading vessel for scheduled maintenance. And the Shell Nigeria Exploration and Production Company Limited, operator of the deep water Bonga field, confirmed the maintenance program in a statement, noting that the turnaround activity has already begun and is likely to last until March, when normal output is expected to resume. The maintenance is described as a statutory integrity assurance exercise that's aimed at extending the facility's operational life by another 15 years, ensuring safer and more efficient operations while reducing unplanned production disruptions in the future. Away from the oil space, now head to the markets to do a review of what happened last week at the close of trade. So the the week ended in the negative, but I think year to date we're still in the positive, so that's a bit comforting, but we shouldn't get too comfortable with that. Equity cap last week gained 0.18% to close at 106,153 trillion naira. Activity was red. Volume, value, and deals all in the red compared to the previous week. And then the sectors, we saw a mixture of color. Banking, for instance, closed in the negative, and we still see that continued profit taking on Access Coal. That is a major contributor to that. Another fugas, though. And then consumer goods, positive, as well as industrial goods, insurance, and oil and gas. Those ended positive. Top gainers for the week, Ziki's agro-allied industries. And you know, when you see agro-allied stocks coming up like that, it's kind of exciting. You know, we talk about less dependent on oil and perhaps agriculture coming back to the fore. And when you look at the value chain, you see companies such as this and that, you know, gives a bit of joy there. Omatech also, as well as the Real Estate Investment Trust. They were the top gainers for last week. Top losers, Nimit Pharmaceuticals, Living Trust Mortgage Bank, as well as May and Baker. I guess we can say May and Baker has served this purpose for a long time. A lot of gains it had accumulated, and now investors are taking part of it. So that's why we see it in the red. Top trades were Vericas, Capital Assurance, Qtix, and Secure Electronic Technology PLC. They were the top trades for last week. The African Development Bank, EFDB, they've approved a $3.9 million two-year technical assistance project and it's to help Nigeria and 12 other African nations turn their energy plans into concrete access to electricity under the Mission 300 initiative, and this is in collaboration with the World Bank. The project, known as AESTAP Mission 300 Phase 2, is part of the joint AFDB World Bank Mission 300 program, which aims to connect 300 million Nigerians to electricity by 2030, and they'll do it by supporting national strategies to expand electricity access, strengthen power systems, and attract investment. Under the new program, beneficiary countries, including Chad, Gabon, Tanzania, Mauritania, Democratic Republic of Congo, Kenya, Nigeria, Madagascar, Ethiopia, Malawi, Lesotho, Namibia, and Uganda, they will receive hands-on technical support to move from planning to implementation. And we will discuss more about electricity on the program today. The federal government has disbursed a total of 2.47 trillion naira to Nigeria's 36 states and the Federal Capital Territory to support infrastructure development and bolster security efforts. This is according to the Office of the Accountant General of the Federation. According to internal documents from the Office of the Accountant General submitted at the December 2025 Federal Accounts Allocation Committee meeting, the funds were released between March 2024 and August 2025 under a special intervention program that's aimed at addressing critical gaps in infrastructure and supporting security operations at the subnational level. The intervention program was financed through non-oil revenue savings, reflecting the government's efforts to ease fiscal pressures on state administrations and accelerate project execution at the grassroots. The Center for the Promotion of Private Enterprise, CPPE, they've issued a policy brief asking the federal government to adopt a comprehensive farm price stabilization and farmer input protection framework as a critical step towards achieving sustainable food security in the country. The policy document, titled Imperative of Farm Price Stabilization and Farmer Income Protection Framework for Nigeria, it highlights the urgent need to balance affordable food prices for consumers with stable incomes for farmers and agricultural investors. According to the policy brief that was released by the CEO, while recent government strategies have succeeded in lowering food prices, a development that has provided some relief for households, the sharp decline in prices of key agricultural commodities has had severe unintended consequences for producers and investors in the sector. The CPPE adds that farmers and agribusinesses are suffering significant losses, undermining production incentives and threatening long-term food security goals. And yes, we've started the month of February, but January was obviously a month of outlooks and review of the previous year. PricewaterhouseCoopers, as PwC, they had their own in collaboration with Business Day, and they're optimistic about Nigeria's economy this year, 2026. And views supporting this were shared at this year's roundtable on Nigeria's 2026 budget and economic outlook in Lagos. Dissecting the drivers of the positive sentiment, regional senior partner PwC West Market Area, Mr. Sam Abu, also shared what CEOs must do to key into the trend and maximize the opportunities. PricewaterhouseCoopers, PwC, a leading global professional services network specializing in audit, tax, and others, and operating in 136 countries, is weighing into the 2026 economic outlook conversation alongside intellectuals interested in Nigeria's economic health.
Our 29th annual Global CEO Survey, which gathers insights from 4,400 leaders across 95 countries, reveals a world that is operating with two lenses. CEOs are looking at the world with two lenses. The first lens is a microscope. The second lens is a telescope.
The economic reform in the country is expected to drive expectations in 2026. However, beyond the leakages, attention is drawn to top-line challenges when it comes to revenue management.
Nigeria is only able to afford 30% of what we need to develop as a nation. So 30% you have, not factoring in the stealing, but the problem is 70% is absent.
I'd like to get your thoughts.
A panel of experts share their perspective on the issues raised and expected trends for the world, the African continent, and Nigeria. They also chart a possible way to handle hurdles to hitting targets. And there are many takeaways from the meeting.
CEOs and executives have to be bolder, they have to be optimistic, they have to focus on a number of areas in terms of how they want to execute their strategies in 2026.
Very important thing that every CEO or CFO must prioritize is around deal screening, how they are able to identify the winners of tomorrow.
Sustainability is not, it's what's going to push us as an economy to diversify our economy, actually. Not to move away from what we know, but to diversify like every other economy is looking at, and find what are our risks and what are our opportunities in building a sustainable, developed country.
Agemi.
The meeting also highlights the need for deeper scrutiny of transactions as institutional investors gradually return to the Nigerian markets.
Editor.
And of course, a major target or factor that could drive that positive outlook is electricity and infrastructural development. We did hear earlier on the program, federal government's efforts to push the development of infrastructure, especially for electricity, through the subnationals. Let's look at a general view of Nigeria's status when it comes to electricity supply. We know for now that installed capacity is about 13,625 megawatts. But available capacity is just about 5,000, and that's 38% of installed capacity. And unfortunately, already this year, today is the second day in the month of February, but we've had 2 grid collapse already. So we have a long way to go to this target. The target by the Nigerian Independent System Operator is 8,500 for 2026. Coming from 5,151 megawatts. Grid generation by the end of 26, that's what they are looking forward to, supported obviously by some of those funds given to the subnationals. Already, we've had on the 23rd and the 28th of January, grid collapse, and if you live in Nigeria, you must have seen that blackout. Now, a lot of people are talking about renewables and energy mix. For Nigeria at this time, gas is used for 75% of energy available. Hydro is 15%. Renewables, and that seems to be the one growing the most, is at 10% at this time. But there are challenges to this. Now, if we see that the majority of power produced in Nigeria is through gas, we still have gas supply constraints and gas pricing. A lot of manufacturers will say that. Aging infrastructure, especially at the generation and transmission parts of electricity, those are no longer news. We're still living with them. And then there's also something they say should help Nigeria, SCADA, I think they call it, Supervisory Control and Data Acquisition Platform. It's supposed to help monitor the supply and ahead of time get the system or personnel prepared against collapse. Then Nigeria still has to deal with vandalism of transmission lines and gas pipelines. Like as if it's not Nigerians that are taking out this, carrying out this vandalism that we're talking about, as if they are not affected by the collapse and all of this power shortage. But I guess we have different mindsets, even though we're all Nigerians. Well, let's look for a way forward. We see the problem, we know it, we live with it, unfortunately. What is the way forward? We're speaking with Professor George Nwagu. He is a former head of PPP, that's Public-Private Partnership Division at the Federal Ministry of Finance here in Nigeria. He's also a professor right now. He's a professor at Stellenbosch University's Department of Mercantile Law, and joins us from our Abuja studio. Professor George, good morning and welcome to the program. So we know the problems, and if you live in Nigeria, we know the problems already, and a lot of people are still scared of removal of electricity subsidy, and we know what that can do to prices, and the government said they can't sustain that anymore, so that's another thing. So a lot of people have said that a major challenge that has stopped the progress in Nigeria's electricity supply and generation is the tariff. It's not commensurate with the value or the capital that's needed. I know that you have done a whole lot in the area of PPP, finding a solution. How should we be handling this issue and finding a balance? Because already Nigerians are complaining of cost, and then there's the talk of removal subsidy, which of course will increase prices. How do we find a balance, and where do we go from here, Prof?
Thank you. That's a very important question, really. I think the first thing is to look back at what has happened. You know, the privatization that happened in 2013, and see what the issues are. What happened is so typically we call it privatization, but I really think that the sector was not fully privatized in 2013. And that has led to a lot of issues. So if you look at the sector as it is, you'll see that the government continues to set tariff, and then the private sector is left with the risk of operations. So the private sector still carries operational risk. And then you have a contract. The private sector enters into a contract that is not fully implemented. The contracts are there, but a lot of times they're not fully implemented. So I'll give you an example. You have a situation where that contract has, it has performance obligations. For instance, the generation companies are mandated to produce a particular amount of power. And then, you raise financing to provide that power. And then, you are not paid agreed tariff for it. So that's a major problem. And the disconnect between the power that is generated and the tariff that is paid is a big issue. Government has agreed to take over, continue to subsidize electricity. And historically, it's not been able to meet that obligation. And so we need to find a way to ensure that, the backlog in payments do not exist, because it's causing majority of the issues. The tariff, when the sector was privatized, the tariff was not cost reflective. You had infrastructure that was really poor, and and government undertook to provide subsidies. Now, to remove those subsidies will, of course, increase what the citizens are going to pay. But if you look at the cost of what the average person pays for electricity now, if you factor in the cost of diesel and the cost of other means of generation, you will see that even at that, even when that tariff is removed, I think it will still be cheaper. So I think what people really want, what citizens really want, is power. They want access to power, and if they're going to be asked to pay for it, then they want to see that power. So if we provide power to citizens, they're not really going to I mean, it won't be that much of a problem. And to round up this, my answer, I also believe that the more generation there is, the drop in the price of power, because like any other product, the more you produce, the more you produce, the lower the cost of production, and I think that will come into play. So if we let go of the hamstrings that are holding the power sector, which is government continue to hold tightly on the sector, and allow a bit the private sector who have taken operational risk to recover, I think that they're able to produce a lot more power, distribute a lot more power, and then the price of power will drop. That's my humble opinion.
Worse before it can get better. Because if we really want to attract this private sector with their money, then we have to do away with subsidy, which will mean it will get worse for Nigerians. But you're saying that if we follow that route, then at the end of the day, we could have more supply, which would also reduce prices at the end of the day in the long run.
Sorry, can you come again, Ini? I didn't hear that very well.
Okay, so I was asking, are you telling Nigerians now that they should get prepared that if it should be better in the long run, it will first of all get worse? Because obviously to attract the private sector with their money, then the issue of subsidy has to be done away with, which would mean higher prices, tariffs for Nigerians. But you see that in the long run, it will get better.
So there are lots of things. So I honestly don't think that the prices will be that high. There are lots of inefficiencies in the system, also that needs to go. The first thing is, let me start with the simple issue of merit order of dispatch.
Okay.
So,
all right, Prof.
What it basically means is that,
please just hold your thoughts.
When you're dispatching power,
Professor Wangu,
the cheapest.
All right, Prof. Just hold your thoughts for a bit. I'll come back to you in just a few seconds. We have to tell our DSTV viewers now that it's a busy day in Adamawa State, Yola, the capital, because we're going to have a road commissioning and then there's a book launch. So that's why DSTV viewers, we're leading you to Adamawa State for those activities. But on our other platforms, we're still here on Business Morning. And if you want to continue, you're watching on DSTV and you want to continue, please just go to our YouTube channel and then you see Business Morning right there. That's is for our DSTV viewers. Now, Prof, back to you, please. Do conclude your thoughts.
So I was saying that I don't think that when subsidy is removed, if subsidy is removed, that it would greatly increase the cost of power or the price of power. Because I'll tell you, we also need to do, there's a lot of inefficiency in the system. And we need to also look at those inefficiencies and remove them. The first one, I was talking about the merit order of dispatch. And so it simply means that when the system operator is dispatching power, that they should dispatch the cheapest available source of power. You will find, so the cheapest one is usually the hydro, then before the thermals come in, and so forth. So you find that this is not done, So so the weighted average cost of capital of power is still very high. So if that basic rule, for instance, was followed, I think it would drop the cost of the cost of power, and that is one. The second thing that needs to be done, apart from just removing subsidy, is you have to have fidelity to your contract. If where you sign contracts, for instance, investors need to be able to raise cheaper capital. They're not able to do that today because You can't go out and raise capital because the contracts are not being followed. They're not being paid on time. The terms of the contracts are not being met. So you need to meet that so that investors can actually borrow cheaper. And then I also think that, instead of the problem I have with subsidy at the operational level, is that it's a bit of it's a bit disorganized. If you want to provide subsidy, I believe that it should be provided at capex at the generation level. So what we have now is we do we provide the subsidy at the retail end of the market. But if you provide the subsidy during construction, at construction level, it means that the cost of construction will be less, far less, and it will mean that you provide that subsidy once. So when the power generation companies building their power plants, you give them the subsidy, maybe instead of their cost of capital being 20%, for instance, and it's lowered at 5%, it means that at the end of the day, to produce that power, to build that plant, they spend far less. And if they spend far less, it means that the cost of power reduces. So there are certain things that we can do to ameliorate the problem. So I'm not saying that the citizens should just, buckle up and bear the cost of power, but I'm saying that we need a number of things. It's not just removing subsidy. There needs to be all of those little things that we need to do structurally, operationally, that can remove inefficiencies. We should do them as well. And at the end of the day, I really think that if there's going to be any marginal increase, it will not be a lot. That's my view.
So, Prof, the conversation around renewables is getting louder. We even hear of some Nigerians now who have done away with the national grid and depending just on renewables. Where does that fit in when we look at a national structure?
Okay, so and renewables have a lot of advantages, and it also has disadvantages. And when you say renewables, I know you're sticking to solar, but there are other renewables. Hydro is renewable as well, but I know you're speaking of solar. Now, the advantages of renewable is speed. You can, in a few months, literally, you can construct a solar plant, while a gas-fired plant or a hydro will take a longer period. You can renewables are also modular. You can basically put them together and scale in phases, and that's a very big advantage. And it's also easier to finance in terms of private sector financing right now. It's a lot easier. So yes, so they will play a very, very important role. And if you see that a lot of the problem, when you were introducing this program, you talked about the grid failures. The major challenge is our grid. And if renewables like solar can, you can do them off grid, of course, and you can use them for industrial clusters. So they do have a lot of advantages, and we need to use them, but they're also very intermittent in the sense that you can't use them for base load, in the sense that they're subject to weather patterns and all of that. You find that the availability factor is low, compared to gas, you find that renewables some of them have below 50% availability factor because they are very intermittent. So you cannot solely rely on renewables. Of course, you can say that you can add battery storage and all of that to make them better, but you cannot rely on them. So what we should go for is an optimal energy mix that allows us use our God-given resource like gas. Nigeria is a gas country. We have gas. Gas is, we say that gas is our transition fuel. We should tap into it and use it wisely. And the policies around gas should be sorted. There are a lot of, these issues can be resolved. We should resolve the issues around gas. We should, and then we should also then use gas where gas should be used for industrialization and whatnot. But then use the renewables for the rural areas where for instance, where the grid does not extend to. And, so renewables should be used to support what we're doing, but we shouldn't throw away gas or throw away other sources like hydro and then focus on renewables. It's not sustainable for the reasons I articulated, which is its intermittency.
All right, Prof, thank you so much for sharing those proposed solutions with us. Professor George Nwago is a former head PPP division at the Federal Ministry of Finance, is also currently a professor at Stellenbosch University's Department of Mercantile Law. Thank you so much for your time and your views.
Thank you for having me, Ini.
All right, let's take a break now. When we come back, we'll be heading to the creative economy. Something good happened last week. It's good to share good news. That's after the break. Please stay with us. You're welcome back. It's still Business Morning right here on Channels Television. Now, a World Bank delegation led by the International Finance Corporation Vice President for Africa, Mr. Ethiopi's Tafara, they formally marked a mandate partnership with TerraCulture to support the expansion of creative infrastructure and skills development in Nigeria. The signing, which took place at the facility in Lagos, was an opportunity for Mr. Tafara and his team to enjoy a rich display of arts and culture and also take a tour around the facility. Culture continues to hold the attention of the world, not just for its richness, but economic potential. The World Bank Group is not new in exploring these potentials. Working through its arm, the International Finance Corporation, the IFC, the group has a history of initiatives such as a $500 million FinClude project, which is aimed at boosting digital skills and access to finance in the creative economy.
You saw the gallery earlier.
And now another opportunity to contribute even more presents itself.
We've demonstrated over the years that we're not, we're internally generating revenue company. We have been able to single-handedly generate the revenue that we've used to build this theater. It's a 400-seater theater that we built ourselves. And we've been able to train and do so many things with revenue generated internally here to demonstrate that this is sustainable business. So the challenges of infrastructure range from spaces, studios, cinemas, theaters, to so many, like I explained to you earlier, the gallery. We had to convert our gallery to a smaller space because we needed space for our staff. The long and short is that while we're here today, we need to expand. We have outgrown this space.
Ms. Austin Peters' proposal is accepted by the IFC.
By partnering with TerraCulture, we're advancing a sector with outsized potential for jobs, skills, and private investment squarely aligned with our goals of inclusive growth and diversification. Nigeria's creative industries already contribute 1.97 trillion naira to GDP and support over 4 million jobs. The opportunity set is significant and growing. IFC brings more than capital. Our prospective financing will be paired with hands-on advisory support to strengthen TerraCulture's operations, its governance and growth. Building on TerraCulture's established role as Nigeria's premier venue for live arts and events, our engagement will aim to support enhancements to audience experience, to safety, and accessibility.
World Bank sees a 400% growth in the creative economy in Nigeria by 2027, and they believe that intentional partnerships such as this will drive and accelerate the achievement of these targets.
Well, we have to say congratulations to TerraCulture, or let's say it personally here. We have Ms. Valale Austin Peters, founder of TerraCulture. We have to say congratulations, making us look good right there. We're proud of you and proud of what you're doing. You know, a lot of times when you talk to the creatives or even businesses, entrepreneurs generally, they say funding is the issue. But that's another divide that say funding is not the issue. You have a great idea and you push it out there, you will attract funding. Maybe you should help us to understand some of those tips that led you. I mean, you're getting funds from IFC, World Bank. That's an individual business. That's a big deal.
It is indeed. So it's a very pertinent question you've asked. I think over the years, we've grown as a business due primarily to consistency. Most businesses tend to sort of like waver. They go from here to there. Nobody knows what you're doing exactly. You have to stay in it to win. We've been there for 23 years. And it's not been an easy ride. People look at this today, but it's 23 years of grind, hard work, conversations, getting better at what we do, creating a venue, a home for artists, and creating that excellence that was so difficult to achieve at the very beginning. But we never gave up. We never gave up because people kept pushing, friends, family, and also I think the character of the entrepreneur, the person also leading the space, is very important. Somebody who never gives up. I just keep pushing that. If people are going to Mars, if people are flying airplanes, certainly running a center cannot be my problem. So from the get-go, I knew it was going to succeed. And I had the most incredible partner then, Mr. Tayo Aderinyoke of blessed memory. So together we carved this idea of pushing Nigeria's creative industry forward. What we're doing today was actually marked down over 10 years ago by Tayo Aderinyoke. But it never happened because of succession plans at GT Bank. But today, the international community is recognizing what we saw then, 23 years ago, that the creative industry has a fantastic opportunity to lift a lot of young people out of joblessness, to create income for people, and to also hone people's skill sets. A lot of young people want to learn. There's nowhere to go. We've become a haven for them to learn. Through our academy, we've trained over 50,000 plus young people in Kano, Lagos, Ogun State. And this has also been work in progress. MasterCard looked around and said, who can we partner with? They've been doing this for so many years. So they came on board and we founded this academy where people pay nothing to be schooled in lighting, in sound, set design, things that we know can allow them to self-employ. So if you're an actor, you need me to employ you. But if you're a lighting expert, you can work at Channels TV, you can work in churches, you can work in performance spaces. And that was the focus of that academy. So where we are today, I think the one word I have is consistency. If you read the book, The Outliers, it's about doing something 10,000 times over. You become an expert. Look at you. You're an expert at this, right? It is what it is.
Thank you.
Just keep doing it. You get better. And we are really good at what we do now. I say with all level of confidence. It is a fact.
Yeah, it was obvious right there. And you know, one of the things you said there was how you turned that facility I think you said about 2 or 3 bedroom house into what it is, into what TerraCulture everybody goes to. Yeah. And I know you talked about the crowd during Christmas and all of that, that you had to house in that place.
Correct.
Coming from just a 2 or 3 bedroom.
Yes.
And then the fact that stage was almost dead.
Indeed.
And then confidently, you also push that forward.
Yeah, you know, it's a journey of 1,000 miles, honestly. I love this space, so I did mine out of passion. I'm a lawyer by training, right? But when I got into it, I said, okay, you know what? There's potential here. I can see there's a lot of hunger. People want to sing, people want to act. And internationally, we've seen that these things work. Anything that works anywhere else can work in Nigeria. But unfortunately, those that can finance these things, there's a very, Nigerians like easy, fast ROIs. They're not interested in investing in the youth. They're not interested in investing in anything other than oil and things that are like, you know, instant, which is okay. You know, it's a choice. But we also pay the price. There are a lot of young people who want to do this. They don't have the schools. They don't have the infrastructure to support their dreams. And formal jobs today, that formal sector cannot take all these young people coming out of school. So what the IFC has seen also is this. And you can hear what the VP, Mr. Tadara, said. He says they are keen on also coming into this space because they recognize the value add. The number of jobs, over 4 million. The GDP contribution, about 1.97 trillion naira we contribute in a very informal way. Imagine if there's structure. Imagine if more people were investing in this space. Imagine what would happen to Nigeria. And when you talk about Hollywood, when you talk about Bollywood, when you talk about all these places abroad, what are they doing? They're doing exactly what we're doing with the support of the private sector. Because we always also think it's government only. Private sector needs to get involved. And that is the story of terror culture. It's private wealth, people who understand the space that have come together over the years to push me. So I'm riding on the shoulders of friends, family, and of course now, IFC.
International. So now, you asked for this, for expansion. Yes. What can we expect? Even if you don't want to tell us how much. But, yes. But what can we expect and the overflow impacts on the economy?
So I think the idea is we are already doing thousands of people in this small space. So at Christmas, in 1 week, 10,000 people, always, for the last 7 years or so, they come through those doors, right? And if we can expand this facility, because of our scaling, we say to ourselves, if we're doing 10,000, imagine if we're able to do 50,000 in that 1 week. But the facility is the limitation now. So we're going to create world-class theater, world-class gallery, world-class restaurant. So the space is already the home, but the infrastructure should match the image. So our infrastructure is archaic. It's beautiful because I love nature, flowers, so I've planted all this beautiful bougainvillea there. But in reality, we're struggling, but we keep making it work for us. So this is the future. If this happens, and it happens well, this can be replicated in other parts of Nigeria by other practitioners, and that's my hope. The more Nigerians, more artists will be able to do what I've done with terror culture, so that we can employ more people, we can bring more joy to Nigerians through our entertainment.
What about, we have hurdles and all of that. How do you deal with all of that? I know you have that determined spirit, you know, but a lot of people, a lot of young people especially, say these hurdles, they are real to them. So what advice would you give to them? How can they overcome those, you know, to fulfill their dreams?
So the first thing I say to people is that nobody is going to help you fulfill your dreams. You have to just own it and do it. So I wanted to do films. I asked 1 or 2 people in the industry, oh, can you show me the way? I'm sure they're like, well, I had to find my way. So I got into it. Nobody gave me the baton. They didn't hand over anything to me. I jumped in, and my films are global. Same with theater. I did it because I loved it, and I studied it, and I got better at it. So the first thing is you have to jump in. Nobody is going to give you everything you need to make it work. The second thing is tenacity. You're going to get a lot of no's. You're going to get a lot of negative feedback. You're going to get a lot of people saying all sorts. you have to be tone deaf, and you have to become very, very deaf. I'm deaf. I don't listen to anybody. Whatever you say is your problem. I am living my dreams. And I think, honestly, that is the biggest advice I can give to anybody. You just have to follow what makes you happy. And in finding happiness, you find fulfillment. And in finding fulfillment, most times you'll find excellence.
And then the funds will come in.
And then the money will chase you.
You know what I'm saying. Thank you so much, Ms. Austin Peters, for sharing those tips with us, and congratulations once again for making us proud and attracting international funding to the creative economy.
Thank you. Thank you for having me.
Let's take a short break now. When we come back, we'll go global. Please stay with us. Welcome back. Let's go global now with Ladi Williams. Ladi?
Good morning.
Good morning,
Happy
Ladi.
New Week. Happy
New month, we should say.
Happy New everything.
Yeah.
At this point, I know he is a sucker for Valentine. Yeah. All right, let's get a check on what's playing out in the markets. Now, global markets head into the new week and the new month with investors bracing for heavy dose of economic data, big tech earnings that could set the tone for stocks worldwide. All eyes on the January jobs report, along with key labor indicators like JOLTS openings, ADP, employment, manufacturing, services activity surveys. The numbers could shape the Federal Reserve's next move on interest rates. On the corporate front now, earnings from market heavyweights including Alphabet, Amazon, Disney, Palantir are expected to test the strength of the AI and tech rally. Together, these updates could drive volatility and determine whether the market's momentum continues or maybe cools off. All right, and it was quite the month for major metals making headlines all through the month of January. Let's discuss what drove sentiment in the month of January and what to expect for February. Joining me now is Carlo Alberto de Casa, he's an analyst with Swiss Quotes. Great to have you on the show. Good morning.
Good morning. Thank you for the invitation.
Fantastic. So we see gold, silver, rallied strongly in early January. What were the main catalysts, behind that surge? Was it, safe haven demand, geopolitics, inflation fears, or interest rate expectations? Talk to me about what played out.
All of them. The inflation fears, but fears related to the independence of the Federal Reserve and also very strong demand. All of them pulled of precious metal, particularly silver, which gained a lot. We should consider that the price before collapsing on Friday, but the price before collapsing on Friday reached the incredible level under $20 per ounce. And just at the beginning of 2025, silver price was below $30 per ounce. So in around 30 months, the price of silver increased by around 4 times.
All right, so what do you think drove that major sell-off on Friday? Seeing big drops of up to 15% for the safe haven metals there. That's quite interesting because it was almost trading like Bitcoin.
Yes. On Friday, we received movements on gold and particularly silver closer than cryptocurrency rather than industrial or precious metal. Silver price collapsed from around under $20 to a low of $73–74 per ounce, posting up to minus 38%, something which is incredible for precious metal and for industrial metal as well. We have seen and we are still seeing today a massive volatility. I would say that the reason behind the fall, actually not the fall, the crash of precious metal and particularly silver seen on Friday, values are different. First of all, we have the decision of Donald Trump and the announcement of having Walsh as next Federal Reserve chairman. Between the candidates, this name is relatively safe, at least from the market, is not seen as dovish as other names. But apart from this, we should consider that the CME increased a lot the margin and some.
All right, so you did mention we're already seeing big drops today. What do you think is the trade for February? Do we just short metals February? All right, okay, network, yeah. Definitely, we're definitely looking out for this month of February. All right, Carlos, can you hear me? All right, okay, I think we lost him there. But definitely we'll be trying to get a sense of what to expect, for this trading month. All right, Carlo, can you hear me?
Yes.
Okay, so what do we do? What do we do February with metals? Do we short? Do we just short metals?
I will say that at the moment we could expect high volatility. For silver, we should see if the support level of $73, $74 per ounce is holding. And if this, I will say that for the time being, we should be really cautious as the volatility will remain elevated. It will remain massive. Apart from this, of course, after a similar crash, there will be trading opportunities, and the investor could try to pick up a rebound. But be cautious because the volatility will remain very high for at least a couple of days.
All right, thank you so much, Carlo Alberto de Casa, analyst with Swiss Quotes. Thank you for coming on today.
Thank you very much.
So technically, Carlo is saying if you're going to trade, just be very cautious out there because you might go short and who knows, the prices pick up. But let's get a check on what's playing in the UK now. We see UK house prices edge higher in January 2026 with a nationwide building society reporting a 0.3% increase in the average price of homes compared with December, marking the first monthly gain after a dip at the end of 2025. The annual growth rate also improved with prices 1.0% higher than in January 2025, slightly stronger than economists' expectations. According to the nationwide house price index, the modest rebound suggests some resilience in the UK housing market early in the year, following a period of softer activity late last year. And in Japan, duty-free sales at major Japanese department stores continue to weaken in early 2026, reflecting the growing impact of strained relations with China on the country's retail and tourism sectors. According to multiple business reports, figures released today show that tax-free sales to foreign visitors fell again in January, extending the downturn that began late last year. All right, those are the top stories right there in the global economic space.
Thank you so much, Laddie. And Laddie will be back at 1:30 during Business Incorporated to take you around the world of business. And of course, then we'll see what's happening with the metals and other commodities at 1:30 intraday market numbers. Well, that's it on Business Morning. Thank you so much for being a part of the program. It's a new week. We have a whole lot more to go. So please stay with us right here. I'm Ini John Mekwa. You have a great day.